So let's get the first edition of Frontier Opening Bell for the first full market and business week in 2021 started with Ali Kansacho, the CEO and founder at Reach Frontiers Management in Nairobi, Kenya. Good morning, Ali.
Morning, Garson.
Hope you enjoyed your holiday.
I did. Thank you so much.
Thank you. It's good to see you. And Akintunde Sulaiman from Greenwich Merchant Bank in Lagos, Nigeria. Good morning, Akintunde. How are you?
Thank you very much. I'm doing very
Thank
well.
you. Thank you very much, Sulaiman. Back to business, everyone. Let's look at the market, and of course, the news is already there that Nigerian stock market went up about 50% for the full year. The Zimbabwean market also jumped more than 100%, by the way, in local currency units. Well, depending on what the dollar rate is for those markets, you can make your calculations of what your index return is. But for the final week of December, the Nigerian stock market finished up nearly 4%. Ivorian market tracking Nigeria's market by 3.09%. Kenya went up about 0.75%. South Africa softened 0.39% and 0.21% for the Egyptian market. So let's get it started. The global stock market starting really positive today. But the whole permutation is about how the economy will rebound in 2021 is getting started with Kenya looking to rebound between 4.7 and 6.9%. That looks like something straight out of a different playbook. Inflation for December, 5.262% in Kenya, while the Capital Market Authority released the third edition of the State Corporate Governance Report. An Equity Bank is continuing its consolidation in the DRC with the merger of the BCDC to form a new banking structure. Zambia inflation at 19.2%. That's a big jump from the month of November. Ali, let's start with this economy, the Kenyan economy. Where is this playbook coming from? Who is predicting this?
So it's a very bold prediction, 4.7 to 6.9%. I mean, it's assuming, I think, that the viral uncertainty is resolved, that a vaccine comes out reasonably quickly to boost the tourism component in GDP. I personally think that we're going to be just below the lower end of that range because I don't see the global recovery gaining sufficient traction in the first half. I think it's going to take longer, and therefore tourism will remain under pressure. The standout for Kenya's economy has been agriculture last year. Its share of the total GDP component increased about 400 basis points overall. Manufacturing slid, but you know, look, we should expect a better performance this year. I, for one, think we'll be in the 3.5% range. But there is confidence that we should see some kind of rebound. Inflation has been troublesome. It's heading towards the top end of the range, 5.62% in December. Food prices in particular have been sticky and trending higher. And also the weaker shilling has also imported inflationary pressure. A lot will depend now on the performance of the shilling vis-a-vis the inflation rate. Kenya CMA releases the third edition of the State of Corporate Governance Report. That's worth having a read. The Capital Markets Authority has been doing quite a lot in that space. Equity Group, this is an interesting development, merging Congo's BCDC to form a new bank. They are the biggest bank in the Congo right now. It's been an absolute jewel in their regional crown. The model is working, an absolute treat, mostly transaction-based fees, which is driving the P&L. Lending, not so big yet, but I think this really has been a wonderful acquisition strategy in DR Congo. A lot of people get scared of the Congo, and Dr. Mwangi is an intrepid sub-Saharan African banker, and where others fear to tread, he goes in. So I think that's a real jewel for Equity Bank. And for people looking at the bank, you can buy that on dips, predominantly for the regional franchise, of which equity is the standout. As we know, Zambia's had a very weak currency. I think the worst performing currency last year, or second worst in Africa. And that's imported a tremendous amount of inflation, as you can see, 19.2%. That's a big outlier.
Interesting scenario for the East African market. Again, we started a new year. Quite a whole lot of things will be on the books as we get started. We got a whole lot more clarity as we get into the weeks and weeks ahead. Let's check in with the Nigerian market. Suleiman, you take your pick from the Nigerian space, from the fiscal side, and the government okayed by the House of Reps to utilize the unspent 2020 capital votes up until March 2021. President Buhari signed on the New Year budget on December the 31st, Friday. That was on Thursday. That was the good news. The Senate says they will prioritize the PIB in the New Year Electoral Act, the new constitutional amendment for the new year. But I think the PIB is the poster boy for the Nigeria's economy and investment in the oil and gas sector. Infinity Trust Mortgage Bank project gross income about 33. Infinity Trust was one of those 4 companies listed on the stock exchange that were migrated from the ASEM to the growth board towards the end of last year, along 3 other companies. The AFCFCA Ghana promised today to do the first shipping under the new AFCFTA. Meantime, the Cote d'Ivoire's trade surplus, beg your pardon, down by 25.77% to nearly $1 billion at the end of 2020 period. But Akintunde, coming first on the Nigerian side, then I'll ask Ali to weigh in on the new AFCFTA. Give us your first word on that as we kick off the formal trading business this today. Suleiman.
Thank you, Boston. Pardon me if I'm not optimistic on the PIB. This is a bill that we've been waiting on for 20 years, about 2 decades, and we are still here anticipating that it's going to pop out and it will be passed by the National Assembly. However, it has passed the second reading in the House of Representatives, and we're expecting that if this goes through, it will bring some sort of positive light in terms of governance, legal framework, regulatory and global standard to the energy and petroleum industry in Nigeria. We hope that the legislative this time can pass it and not shove it to the following year. I'm a bit skeptical because we are expecting a general election in 2023, and usually by this time, mid this year, you start seeing the chess players trying to position themselves for the primaries and subsequent general election. So we might see a bit of lag in the passage of the bill. The electoral bill, on the other hand, we'll say that the INEC is trying to inculcate some sort of technology in the registration of voters, and we'll say this has always been a problem in the political space, because you see both parties trying to, sway in the sides at which they feel will favor their constituents. And we hope that we will see some sort of partisanship that would lead to the division of the House, such that this bill will stall again. Going into the rollover of capital expenditure, it's surprising that if you check the data that was published by the Budget Office in July, you will see that just about 445 billion have been expended in terms of capex for this year. Over about 2.7 trillion was actually passed in 2020. Yes, in 2020, apologies. And you see that about 2.7 trillion was passed in the 2020 budget. And that represents just about 17% of implementation. That is abysmal. That's poor, because we can't allocate so much and utilize so little. So I think it makes sense for that to roll over into 2021. But how much implementation can be done before we kick off the 2021 bill itself? So this goes to a very large, this signifies why you are having a lot of poor infrastructure in Nigeria. It's not just about generating revenue now as well. The implementation it's not as solid as it should be. We expect that more funds will be released to accelerate completion of this capital project. You agree with me that Lagos-Ibadan Expressway has been going on for years. I mean, I can't remember, it has always been rehabilitated and it's still ongoing. This present administration adopted it, the previous one adopted it, and it's been rolling over and rolling over. And we are not still certain if this current administration will conclude that capital project. So, I mean, I think the government needs to find a way to accelerate deployment of this funds, yes, in order to complete project in record time.
I agree with you. The Lagos-Ibadan Highway it's been on the books for 22 years. In fact, 2021, since 1999, democracy, we've been working on that highway for 20 years. Ali, that's quite a record time. But if you ask me, Sulaiman, it's likely that the Electoral Act will be passed even before the Petroleum Industry Bill. I think it's in the interest of the political elite that the Electoral Act is passed first, secure their own future for 2023 before they deal with the PIB. That's my take, pessimistic view, by the way. But again, anything could happen. There could be a change of heart somehow. But the AFCFTA has taken off. And whether we like it or not, this is teeing off the game, as it were. It's not going to be a walk in the park. Ali.
So look, overall, this is the best concept to be a catalyst for sub-Saharan African GDP growth. I think there are serious challenges in the execution. The devil will be in the detail of the execution. Do our countries embrace it in the manner that it says on the label? By that, I mean, we've got to not see non-tariff barriers. We've got to see people genuinely open up their economies to their African brothers and sisters. And really, I think it's incumbent on our leadership to get with the program. Most important of all for me really is the ability of our human capital, which is our most valuable asset, to go wherever it wants to go on the continent and look for jobs wherever they can get it, do business across our borders. Our people are very entrepreneurial, Bison.
I get your pardon. I get it.
You know what I mean? Wherever you go, you'll see a market, you'll see our people trading. We need to unleash that genie out of the bottle. If we can do that, we're going to do what the likes of Benedict Aroma at the Afrexim Bank is saying. But really, as I said, it's really about the will of our leadership to embrace this open market across the continent from north to south and east to west.
Very important point. You touch on the human capital. The free flow of human capital is going to be the best, whether they're artisans, skilled workers. Again, for countries with very low level of skilled workers, the infusion of those who are more expert from other countries will pass some knowledge. They will share knowledge, they will share skill. So no one should be scared. For example, Nigeria, if you have an influx of Ghanaians or the Ethiopians or the Kenyans or the Rwandans who are coming through to help us in the real estate sector, for example. Sulaiman, you don't seem very enthused like that. It looks like, what's your take?
Great. I mean, I agree with Ali. We need to show the spirit, the intent. We should not just go beyond intent, but now we should go to the level of implementation. We should actually start seeing results. Yes, human capital is important. There needs to be that free flow, free entry, free exit. This would help to spur up economies, but we should not forget that there needs to be that infrastructure in terms of soft infrastructure and hard infrastructure. Now, transporting goods from say, Nigeria to Ghana, there needs to be that connecting rail, because it's easier to use rail to move those heavy goods and those goods in large quantity. We need to start seeing those infrastructure agreements between nations and countries, such that we can connect Nigeria to Cote d'Ivoire, to Ghana, to wherever, because with the agreement is just a starting point. I mean, it's just a drop in the ocean. We need to start seeing governments sit down together and see how we can foster those trades. Also, there needs to be some sort of identity in terms of digital identity. In we carrying out this trade, the database needs to be developed such that whoever is coming to trade, whoever is coming to do one sort of agreement or any business needs to have a digital imprint in the country it's coming into and when it's leaving. So it shouldn't just be based on passports and all that. We need to have that digital imprint. Also, internet connectivity is important here because a lot of payments will be going through, via the internet, via electronic payments and platforms. So that ease of payments should be optimized. If we keep relying on using hard currency, we might keep eating the rock, because at this point, we should find ways in which we can motivate people to actually trade, not just opening the borders, but creating that enabling environment for them to sustain business.
I agree with you. Like Ali was saying, if human capital moves across borders, how do you pay those skilled workers, for example? So you need banking system in which you don't pay them in cash, for example, isn't it, Ali? Then you just credit their account of their bank in their current in their country. For example, if they're coming from Kenya, you just credit their account in Cooperative Bank or in KCB, and that is just it, Ali, isn't it? Absolutely. Without paying them in cash.
Yeah, I agree with you 100%. And I think all these issues are going to come to the fore now. But if I look at the infrastructure, the mobile money phenomena that we already have the building blocks to build this single market. And I think we've just got to embrace it and not be afraid of it. The thing is, when change comes, there are lots of people in privileged positions who've enjoyed exactly the economy we've had until now. And the question is, are they strong enough to slow it down, or can we push on through? And I think that's going to be the key issue over the next 12 to 18 months.
Interesting. Thank you so much. We'll continue this conversation on a daily basis. In fact, towards the next few days, we'll have a whole show of the Frontier Bill dedicated to the AFCFTA. But let's talk about the Southern Africa, which has been called the headquarters of the second wave of the coronavirus. What's going on there? Insurgents are asking Total to vacate Mozambique LNG. A whole lot there within the business and the markets, with Invest ETF listing a fresh 100,000 first gold debentures at 276.2 rand per debenture notes. And Zimbabwe says its milk output was down 4%. Ali, this Mozambique LNG and the insurgents now look like something we've had to seriously deliberate upon.
Yes, this is an enormous gas play, $20 billion project. Of course, Total have been in the lead. It's seen as transformative. There's the potential for Mozambique to be the next Qatar. But what has happened in the Cabo Delgado province, which is where this LNG project resides, is a very vicious insurgency. They've seen off the Russian PMCs who went with the tail between their legs. The government, for all their bravura talk, have not been able to repel the insurgent advance. And over the last few days, Total evacuated their staff out of this area. So this is a pretty serious situation. And I don't think the Mozambique government, can spin the narrative anymore. The question is, how are they going to deal with it? Have they got a plan? Are others in the region, SADC, the South Africans, they spoke of the Zimbabweans helping, are they going to come and intervene on the side of the Mozambique authorities? But really, this is quite a serious situation. And for now, I think what we've learned with the evacuation of Total staff is nothing's going to happen unless there is some development on the ground. And it's important that happens. You started by speaking about the coronavirus. This is the Southern African belt. Most countries there, Namibia, South Africa, etc. Zimbabwe, hospitals are full. We've seen a very big surge in that part of the continent, which has taken us to daily infection levels on the continent, which are 40% higher than the previous peak in July. So definitely it is a hot spot right now. We had that new variation as well, causing challenges. With respect to a couple of your other headlines, Zimbabwe milk output drops 4%. Zimbabwe has been quite resilient because of the agri-economy. which has outperformed, and 4% is pretty small if you think about it in the context of the overall production number. But we've had other challenges in Zimbabwe, and it will be interesting to see whether the very bullish talk that came out of the finance minister plays out this year. If it does, they'll be the fastest growing economy on the continent.
Yes, and news overnight also says there's a bit of stricter restrictions on because after the New Year and Christmas holiday, it looks like Zimbabweans went to town, and the infections virus has now surged. So I saw on social media yesterday that there's now very strict restriction, close to a lockdown in Zimbabwe. Akintunde Sulaiman, I'm not sure we were different in Lagos, in Nigeria, over the weekend holiday, Christmas and New Year as well.
No, we weren't. I mean, if you check the beaches in Lagos, if you check the event centers, they were all crowded. We had a whole lot of people partying and chilling and pulling off. But I think we would have to wait a week or two to see how that manifests. We're already seeing spike in cases in Lagos, and hopefully it won't get as bad as the first week where we had to close down. The state. So we'll wait 1-2 weeks and we'll see how that manifests.
Yes, and again, when you look at schools are still, for Lagos State schools, the primary and colleges are still, the government announced overnight that there will be indefinite closure of schools, except those at the tertiary level and above. So that tells us that the government in Lagos State is not taking this lightly, at least in the first place, to see how things, like rightly said, a few weeks, government will want to see how the numbers come out, look at the footprints, then decide when schools will be reopened. Finally, touching on North Africa with Egypt, with the Carthage Cement deal still on the table, Al-Karama is announcing pre-qualifiers for the sale of its majority stake in that cement company. But it looks like the oil and gas exploration deal in Egypt is now slowing down with a fresh $1 billion in the Mediterranean and the Red Sea area. That looks one big business. On the flip side of that was the problem with Tunisia, where some Egyptian fishermen seem to have crossed the line and they've been detained. The Egyptian Foreign Ministry over the weekend says they're keeping an eye on these fishermen and trying to secure their release from Tunisia. It looks like one very little diplomatic fishing problem there north of the continent, Ali.
Yes, fish has become a very big issue, particularly in the UK. Brexit story. But I don't think this is as intractable as the UK challenge. I suspect President Sisi will pick up the phone and they'll resolve that pretty quickly. I don't see that this should be a big sticking point. Egypt signing $1 billion of oil and gas exploration deal in the Mediterranean Red Sea. This whole oil and gas thing in the Mediterranean and in the surrounding areas become red hot, hasn't it? Of course, you've had this alignment of Turkey, Qatar, and others on one side, and Egypt, UAE, Israel, Greece on the other. It's a very fascinating geoeconomic situation that's developing. Egypt, of course, are moving quite quickly. I think they've had these big gas finds as well. Al-Sisi put in this program to gas fire everything, it seemed, by 2030. So let's keep an eye on that. AFCFCA saying 400 banks ready to support new trade deal. I've got to give them credit. Really, they are very good at the networking, marshalling of the African banking sector and further afield. You remember they had their annual meeting in Russia. They brought Russians in. You know, his ability to navigate all these different stakeholders really is quite remarkable, I have to say. Yes,
quite remarkable work. AFCFCA, I think, is done quite well in onboarding and birthing the new AFCFTA. I give it to AFCFCA. The level of work that has been done over the last 1 year or two is quite remarkable. And they're talking about 500 banks with a total trade funding facility of about $8 billion and promising another $25 billion, like you said, sourced from outside the continent to be ready for the AFCFTA. I think with AFCFCA and AFDB and the rest, I'm sure we'll be able to pull something through. with the New Deal. Sulaiman, give me 1 minute of your time quickly to give me a sense of this week's trading outlook on the Nigerian market. Then Ali will give us about 30 seconds of that also for the Kenyan market.
Thank you, Watson. Liquidity remains the king in Nigerian market. The banking system is still highly liquid, so we expect that we still see persistent trading both in the fixed income and equity space. However, be it the first trading day of the week of the year, we expect that investors and market players will be a bit cautious into going into the market. They will exercise some sort of sideline play to see how the market plays for the week. Also important is OPEC is having a meeting today to consider additional 500,000 barrels to be pushed into the market. Russia is a bit in support of that, while Saudi Arabia, on the other hand, expects that that should be held onto for now, looking at this second wave infiltrating the market. We expect that OPEC at the long run may sit that out, may hold on to implementing the additional production quotas and see how the second wave plays going into the year.
Thank you so much. What will be the big play for the Kenyan market from today for the first week, Ali? Would it be the banks?
Yes, so I think it's interesting. You know, I was looking through the numbers last year. Your market, of course, best performing in the world, up 50%. Kenya did not perform that well. It was down quite substantially, double digits. So I think there's room for the Nairobi Stock Exchange to rebound. The banks will obviously lead that rebound, and Safaricom. I think Safaricom has room now to move higher because of the relaxation with respect to fees on M-Pesa. And I think with the banks, you're going to see outperformance by the likes of Equity Bank, who are well diversified, KCB, also regionally diversified. So yes, on balance, I would think the stock market will close higher this year. The question is, do we wait until we get the results and digest those, or can we move ahead in January? I think we'll move ahead in January because we should see some liquidity from the developed world.
Yeah, I agree with both of you that earnings will be a key consideration moving forward within the next 3 weeks to 4 weeks as a full year for 2020. Then folks can use that as a template perhaps for the year 2021. Thank you so much. It's good to have both of you to start the market week. Ali Kamsachu in Nairobi, we appreciate your time. And Akintunde Sulaiman from Greenwich Merchant Bank. Thank you very much, both of you. Have a great week. See you again tomorrow. Bye for now.